Hello, everyone. I hope you guys are having a wonderful day and had a great weekend. This is going to be the stock market analysis on the futures right now, and we're going to be covering some of the larger time frames and what I'm seeing on Elliott Wave, and what the markets are doing at the moment. If we have any changes on the monthly time frame, weekly time frame, and daily time frames, and maybe some shorter time frames as well on the S&P 500 futures. So let's just cover it at the moment. So again, my primary count for the SPY is that we are currently. Oh, let me just open the Elliott Wave, my Elliott Wave chart. So right now, my primary count on the S&P 500 is that we are currently going to go down into a B wave here, and this was a extended B wave right here. And again, we right for the time being, it looks like we're putting in a lower high, and that this could be the top here for the markets at 458 or 460, depending on where you actually topped out here. It was around 459 and 44 cents. We'll have to see if this B wave extends higher. But for the time being, looks like this one might be it. And again, don't want to be too early to the party here. And again, we are trading with very light volume, and today is a CPI week. So if we have better news than expected, it's still possible for the markets to float higher. Okay, so let's just get into it. We'll take a look at the S&P 500 weekly time frame as we just opened a new weekly candle. And again, last week, I don't know if you guys could probably tell, it was looking very bullish, right? We were looking very bullish following a massive, pump week that we had, and we had a little bit of upside, but it started to fail at the beginning of the week, and it started to roll over as we saw on the daily time frame. Right now, on the daily time frame, that S&P 500 green money flow is really starting to retrace back to the zero line, which is not something that you want to see from a bullish pattern. You want to see increasing green money flow like we've seen here in the past from the markets rallying after the banking crisis. So again, that you can see that a lot of capital is going into the markets, and right now we're seeing the markets drop, and we're seeing that money flow starting to retrace on the daily time frame. Again, monthly time frame obviously is always going to have a massive amount of green money flow because we've been rallying for the past 20, 40 years, basically ever since they've been doing quantitative easing, especially from 2008. Right, we've seen no real significant pullbacks, except maybe in 2018 and 2020. But overall, looking at the weekly time frame, I think we've seen a big change in momentum here. We are starting to lose it, and again, I just keep my eyes out, and I would be careful getting into longs at the moment. So again, that's my analysis on the S&P 500. We could take a look here at the triple Q. So again, which is going to be the Nasdaq. And again, the Nasdaq on the monthly time frame, you're seeing a big shift, especially from August. Here, you see that the monthly time frame is now with a 10 and a 0. So again, significantly more bearish than the previous month, and a big slowdown in momentum as well. Right, you see that in the month of August, we actually failed to make a higher high. And on the weekly time frame, we actually printed a red dot here on Market Cipher B and Market Cipher A. And the dual band strength index numbers are looking a little bit bearish at the moment. So this we might get a bit of a shaky week here in the tech sector. So keep your eyes out and keep your eyes peeled for some shorting opportunities. I wouldn't be into many long positions here on tech, especially with what I'm seeing in the charts. I think we may be getting ready for a pullback to some lower levels here. So again, looking at the daily time frame, you can see that the green money flow is basically almost at the zero line. Here it's just like at the level 1, and it's most likely going to cross into the red money flow once we get a drop. If we get a drop, we will see this cut into the red, and once we cut into the red, I mean, I don't need to tell you what happens once we cut into the red money flow. It's usually followed by some downside, unless there's quantitative easing, of course. But when you're doing quantitative tightening, you're going to see that there's going to be a lot of downside in the markets. And I'm not saying that we're going to start a super crash here, but although it's not out of the question, right? There's always a possibility in the markets that that they could start to roll over and crash. But what I would be doing right now is definitely not opening heavy, massive long positions. Like I'm seeing a lot of YouTubers say like buy the dip, doesn't matter, just buy, get ready. We're about to take off to new all-time highs. We are. This is where you want to be cautious, right? It's especially if you're near the all-time highs and you're hearing a lot of people talking about the gap is going to fill on the SPY. It's going to fill the gap soon, right? Because we do have a gap to fill up here, right around. Let me take a look here. We're right around the 455 level. There's a gap to fill, and you're hearing a lot of people fill the gap, fill the gap, fill the gap. And if you look at the weekly time frame on the triple Qs, you actually have broken down from the RSI trend. So this is very bearish in my opinion, and you're failing to break above new highs right here. So again, if you can't take out these highs, then the bears are starting to gain control here. And if they're able to push it down, you have actually many gaps to fill on the daily time frame for the triple Q. So again, tech sector could be in for a rough patch, especially if it's going to start to sell off. Okay, so again, if we get into the shorter time frames too, you can see that we were in some red money flow, and we got a nice bounce, big bounce here in the S&P 500, down from 4,300 all the way up to 4,500, 4,550, and you can see that right there was essentially the peak. The momentum was already coming down, and right now you're seeing that the momentum is down, and you're seeing that the green money flow is also starting to curl back down, and the VWAP has already been extended up. So again, maybe at the market open tomorrow, we're going to start to break down lower. And maybe, I think everything's going to be pretty quiet until Wednesday. But again, it looks like the forecast is already to have higher inflation. Let me just take a look at it quickly. So on Wednesday, the forecast is for the inflation to be 3.6%. And previous one was forecast to be 3.3%. And we got 3.2%, which was better than expected. And that was quite good for the markets. But right now, it seems that inflation is really starting to gain traction again. The rubber is really hitting the road. And it's possible that we could go higher. And right now, you're starting to see oil prices back above $80, $85 a barrel, which is not bullish for the markets. You really want to see oil start to go back down. But with the U.S. having emptied 2/3 of their SPR reserve, right, the Strategic Petroleum Reserve, that is not bullish, because they are going to have to refill that. They are now vulnerable to OPEC, and just the fundamentals are not very bullish to me, it seems. And again, as there's so many people that are confident that we're going to make a new all-time high, especially when the interest rates are so high, it seems a little bit crazy to me. But anything is possible, right? The bulls have been right all year long. We've been rallying nonstop since the October lows, and we even had a financial crisis here with the banks failing, and they hit it with quantitative easing, and that's probably what's been driving this entire market up. But again, they only hit it with 300 billion, so you're probably starting to see a lot of that liquidity dry up, and right now you could really tell inside the green money flow, right? And if we take a look at the Dow Jones, you can see the Dow Jones actually has already crossed in that red money flow, which is quite bad in my opinion. And you take a look at the weekly time frame, you have more bearish numbers on the dual band strength index. You have a 10 and a 0. You do have some green money flow though, however, but again, which index doesn't have green money flow on the weekly time frame? And the monthly time frame, again, this is basically the same thing that the S&P, I'm looking for the S&P to do, is to top out in a B wave here and come down in a C wave. And I think it's going to be a very extended C wave, and it's going to shock a lot of people how low we're going to go. But again, I can make predictions all day long. What's important is that they play out and that we make money along the way. So again, hopefully you guys enjoyed this video and it was helpful, and I hopefully you guys pay attention to the markets, and hopefully this plays out. Anyways, thanks for listening, guys, and I hope you have a wonderful day. Peace.